Hello and welcome to Commodities Corner. Today we will be discussing the performance of precious metals. On Friday, gold hit a 1-month high. Today I'm joined by Rohit Savant, Senior Commodity Analyst at CPM Group in New York. Thank you very much for joining us today. So how is gold performing so far this week due to the retreat in demand for gold from India and also as a result of the announcement of a Greek debt agreement?
So far this week, we've seen gold prices come off a little bit from the highs that we saw on Friday, but there hasn't been a substantial decline. On Friday, we saw prices settle at 1751, and right now they're trading at about 1748. So it's down from Friday, but not strongly. With regards to demand from India, you have seen weakness in demand. The first half especially has been extremely weak, but you did see some pickup in demand during the festival season, and there is a possibility that demand could remain firm, may not rise strongly, but may not decline either over the next few weeks as we head into the wedding season. I guess you have a couple of factors that are negatively affecting demand from India, one of them being the weakening of the Indian rupee, which makes the landed cost of gold in India a lot higher than the international price of the metal. But that really isn't stopping Indian consumers from going ahead and buying gold at times when they do need it, which is usually in the festival seasons as well as during the marriage season. So we probably see some stability in gold demand from India in these last few months, which should offset some of the weakness in the first half of the year. With regards to the Greek agreement, that's typically price supportive of gold. One, because it would support the euro. Secondly, it kind of improves the sentiment in terms of economic growth going forward, so which could result in inflation, which is usually positive for gold. So that agreement should be positive. We have seen prices come off. I guess that is largely because a Greek agreement was expected to some extent by the market.
And how is silver performing today?
Silver's actually held up fairly well. You saw a similar jump in silver prices on Friday, and prices have sort of remained at those levels even as of today. So silver has actually been performing pretty well. You're probably seeing a fair amount of piggybacking off of gold. Also, any positive news from the Greek side would be positive for economic growth.
On a longer scale, how do you see gold and silver performing throughout 2013?
Over 2013, we think that gold prices would average about 1666, which is off slightly, about 0.7% from our expectation of 1677 for this year. Then in the case of silver, we actually, because it's a more volatile metal, we think silver prices would average around $28.86, which would be around 8% off from our expectation of silver prices to average $31.32 this year.
South Africa's economy grew 1.2% in the third quarter. Many expected a figure of 1.5%. The strikes have had an impact on this. The situation remains fragile despite the agreement made with miners. How is platinum and palladium been performing since this agreement was made?
You're actually seeing platinum and palladium prices both rising in recent trading sessions. The supply side is definitely a positive issue for both platinum and palladium. For one, there's a lot of mine supply concentration from South Africa. So South Africa is the largest producer of platinum, second largest producer of palladium. So a huge amount of both these metals come from South Africa, and the issues that you're seeing in South Africa are not short-term issues. They're issues that we expect would continue for several years on from now. I mean, yes, they have reached a resolution in terms of the labor strikes, but there's no reason to believe that something else will not pop up in the near future, both in terms of labor, in terms of infrastructure, policy. So you have a lot of structural issues in South Africa which are likely to take several years to be resolved. In the case of platinum, we expect prices to average about 1570 next year, which would be up from about an annual average of 1545 this year. In the case of palladium, we think it could average about 1650, which would be up from an average of about 635.
Great, thank you very much for sharing your expertise with us today. That is all for today's Commodities Corner, but my colleague Navjeet Gurwal will be looking at oil for Thursday's Commodities Corner. Have a splendid evening.